What's up, fam? It is Theos. We are going to talk about first present fair value gap, why first present fair value gap exists, why it's important, how long we should refer to it for, and what invalidates it. When is it no longer important? Enough with me on screen. Let's go ahead and hop to the charts. Um, I actually want to hop on this Project X to show you real quick first. So here you could see first present from 112, first present from 114. I have all of them marked out. First present down here, 21st. So now you could get an idea of how long. Minimum 3 days back. But it could be used up to 3 weeks. I don't personally keep them on the charts for that long, but minimum 3 days you should keep it on your chart and refer back to it. I personally would refer at least the past 2 weeks, new day gaps, new week gaps for 4 weeks. But we're just going to talk about first present fair value gap today, mixed with the new day open gap, of course. So here's a random day, scroll in. You could see previous day settlement price, the new day open price. Take that with Fibonacci 0 to 1. So you have your upper quadrant, your middle, consequent encroachment, 50%, your lower quadrant. So use any time after 9:31 to 10 o'clock. You will see a first present fair value gap. And if you don't see it on the 1 minute, you can drop down 30-second, I promise you. If we were to, you would see it there. But for the 1 minute basis, I would use on this day, first things first, check electronic trading hours. Where's the 22nd? Open. Right here. There's no news at open. So this is a valid day to use first present fair value gap prior 9:31. So this would be first present of 22nd. Why? No news at open. Major displacement. Pre-market swept AM highs. Lows left open. And we don't even need to know the rest of that story because regular trading hours, we have new day open gap. Look at time, market open after 9:31. That is your first present fair value gap with extended trading hours. I would use. Some people, if you're only trading on this time frame, regular trading hours, you'll see where? Where is it? There. It's all the way here. Volume inversion. I'm not extending it out. There. That's what other people would call their first present fair value gap. And both are valid. In my mind, both are valid, but this is the true first present. This one. And then, of course, your trade. Target 50% and or settlement price of previous day. So either target 50%, half off, and then full target, would have been the close, but of course you would have to manage accordingly. And then you could see we sweep, building that sell side. I guess I don't have it there, but you could see the sell side, it's building. And then of course we know buy side first present. And it was a bullish day on a higher time frame. But let's go to another day. Right here. So again, if you don't see it on a 1 minute, you could see there could have been one right here on the 30-second, but we don't need to go like that. So settlement price to open price. And then where's your first displacement after 931? Where's the displacement? I see, and I would call this first present for 116. And then again, you could see the gap. This time, what do we do? Sweep to a lower low. Oh wow, filling this gap here. Here, let me mark this one out. Where are we at? 16th. See how they overlap? This is that low low from the other gap that we marked. Swept the liquidity. And then, of course, who cares about the rest? But so the trade from first present here could have been 50% or gap closure. Of course manage with time price. How is time behaving with price? And then you could see, apologies, another fair value gap. Look at time, 10 o'clock, 11 o'clock, silver bullet. And again, what did we mark out? This gap here. I believe I have opening gap, open gap, open gap, open gap. Right there, that works. There you go. See that? So you could have targeted the low, that gap, because you know there's liquidity. And of course, you could see, of course, within silver bullet macro, volume inversion, not extending over for time purpose, fair value gap. That was our higher time frame sweep here. That's the, do I really don't have it. Whatever, that's misery. So you could see key time of day, 10:50, 11:10 macro. Take that off. We inverse with a fresh fair value gap. And there's that fair value gap there with this buy side liquidity here. You can see this. This is too smooth. That's too smooth. So Optimally, would want to get it in on that candle. Stop loss target here at 1054. But if you wait for double confirmation with extra targets or extra stop confirmation, be more optimal to take that trade right there. And then you can see how the bodies don't want to go below the upper quad or the lower quadrant high from the new day gap. And it just goes into this little sloppy fest. It's rejecting and major gap. There's first present here. See, this is a slop day. See how it's like no clean first present and movement. First present, I would call this first present of the day. Then you could see price action around it. Sloppy. And if you wait for macro, first macro day, we're just building. And we had this massive gap. Excuse me. Building in the lower quadrant, refusing to move lower after sweeping this sell side here. Looking close. What is that? Gap, gap between the bodies. I'll extend this one over. Price wants to go somewhere now. After sweeping, creates that suspension block in that first present fair value gap. Look at the 50%, and then here, let me turn on the 50% of this one. Look at that. And then, wow, really? But what did we know? Equal highs. There's major sell side from AM session. This was a slop fest at open. It was a setup for the real move afternoon. And then what could that be? 1150, 1210. Gives a beautiful entry setup for the real move. Optimally, you always want to aim for that 50%. And then, of course, your low, your AM sell side. Into afternoon session. You could just see how it plays out majestically. Mark this volume inversion there. That off screen. This fair value gap here. The suspension block. Because it's a double volume inversion. See? Double volume inversion makes that the suspension block. Then we have double confirmation because we have this fair value gap here that it failed the wick. Sorry. Wow. Failed to reach because this was enough for it. This one. And then look at the time, 12:50. 110. Failing to get into a higher draw. Suspension block holding to the T. Clear it out. It's a volume inversion. Look how beautiful. Beautiful. Fair value gap here. Turns inversion. Continuing your bias lower with a new fair value gap inside of it. Continuing lower to whatever that magical target was. 931 low. And well, if you weren't out, if you were not out all out there, you still have supporting bias, continuing lower, continuing lower, continuing lower, until of course the time 350, 410. It's that end of day, and then just look how it's just set up to just boom, boom, and just go where? Right back above all that slop. Where we had generated buy side liquidity. But anyways, just a little breakdown of first present fair value gap. So one more time, go to whatever today was. Here's a beautiful example. Where's first present? I'd call that first present fair value gap right there. Not discount. Well, it is discount, but besides the point. Oh, I'm pretty sure I already outlined this shit. But your first present, take stop loss, target 1, target 2. I go to your daily. That daily wick. Beautiful draw. Simple buy side program. You just need to know where price is likely to draw with why. If this, then that. If this, then that. If this fair value gap, 50% hold, no bodies lower quadrant, then potential draw target. And it's like, oh, okay, boom, stop loss, you could do right there, boom, okay. But what time of day? 9:50, 10:10, first macro a day. That's your first time to look for an entry. Okay, 10 o'clock, 11 o'clock, silver bullet. Could it continue the draw of whatever we're playing right now? Okay, continuing thesis. Then higher potential draw target by 11 o'clock if target taken. And okay, signs of not wanting to break away to that upper quadrant. Okay, wow, now is potential reversal sign. Okay, 1, 2, 3. doesn't want to break. Okay, okay. Short it. Stop loss, of course. There, target, wherever. There was an imbalance left unfilled. Imbalance left unfilled. At what time of day? 11:50, 12:10, 12:30, 1:30. Okay, target taken. Now you have time and then price from time and price, time and price. See continuing thesis. Okay, what's a macro? 1250, 110. What did price do? 1250. Let's go back to white. 110. Okay. Fair value gap. The inversion. Slop. Anyways, hope this helps a little bit. First present fair value gaps overall, new day open gaps, just a little touch. And if this helped and you might need more, go ahead, let me know in the comments. I can make more in-depth videos. Hit the like if this did help. And don't forget, we got the top floor loading. Later, fam.